Good day everyone, I'm FK here. Today I'm going to conduct the tutorial video on the pilot case for chapter 2, which is IDA. So before we go any much further, I hope you have made an initiative to look through the IDA case that was given earlier. So this is normally will be tested in the part A of your final exam, and then obviously it will be included in test 1 as well. Okay, so this is Ida case. She's a financial manager, earn roughly about 10,000. Okay, so before we go any much further, make sure that you read all the what we call that informations here. So in this case, what matter is salary, and then she pay for the 500,000 over here. So this is what's something that you will have to consider. Okay, prior to that, okay, so this is the item, okay, that we have to take care. Okay, so the objective of the this topic, okay, or this question, basically we want students to be able to prepare the balance sheet, or personally I would prefer to call it a statement of net worth. Okay, and then secondly, you should be able to prepare the cash flow, and then later you are expected to calculate the ratios. Okay, because preparing a balance sheet and cash flow alone might not be able to give us a better insight, okay, on the credit standing of the in this case would be IDA. So we have to calculate ratio. Okay, in this case normally, okay, we will calculate liquidity and debt ratio to know better, okay, the financial position of individual, or for your case. Okay, so let's begin with this case. I hope that you have familiarized yourself, okay, to put it into perspective. Okay, all these item, okay, you have to record it in the what we call that statement of net worth, or cash flow then. Okay, so but before we go any much further, do understand that we are preparing the balance sheet for a personal. Okay, when we talk about company, I believe that you are very much familiar with the current asset, and then later non-current asset, whereas at the liability side, okay, we know about the current liability and long-term liability. Okay, obviously we have equity then. Okay, so but for here, in the case of the personal finance, normally for the statement on net worth, for at the asset side, it is classified into current asset, okay, followed by lifestyle asset and investment asset, whereas for the liability it will be the same, which is the current liability and long-term liability. Okay, so without further ado, let's focus on this one. Okay, this case, whenever you want what we call that, to answer this kinds of question, I would suggest then for you to first classify, okay, for each item where it will goes to. In this one I have do some color coding, okay, just I want to give you some idea. So say for example this one, children living allowance, where does it will go to? Okay, so it will goes to the cash flow. So anything in red in this case will be go to cash flow, whereas in yellow it will go to balance sheet, lifestyle asset. So this is one I mentioned just now. There are two, it will go to two statement, is either cash flow or balance sheet. Okay, and then in the balance sheet for asset side, we have the liquidity, we have lifestyle asset and investment asset. Okay, whereas for the balance sheet, okay, we do have what we call that current and long-term liability. Okay, but be careful on the certain asset or certain item. In this case, textbook is a lifestyle asset. Obviously, when you buy something, it is a cash flow. You have to record it as a cash flow outflow in this case, and then it will increase, okay, the value, okay, of asset that you have then. Or in other words, okay, your books, we have more collections of book, which is considered as the asset. In short, it will, in this kinds of thing, especially as said, it will hit both the balance sheet as well as the what we call that cash flow. Okay, after you have classified this one, okay, each item, don't forget to go for each item, and then we start preparing our balance sheet then. Okay, so this is what we have for the IDA. So you take each item that you have classified earlier. I'm talking about here, this one. Okay, each item that being classified, and then those goes to the balance sheet. Okay, just follow. If you have identified the items, go to a liquid asset. Say for example, this one saving account, so you just put it in the liquid asset, and then same goes to the lifestyle asset then. So be careful, yeah. Okay, don't make any silly mistake. We have seen that before. Okay, this one is the one that I mentioned earlier. Okay, when this is the existing value of your clothing, in this case is 5,000. So this is how much she's what we call that spend for the clothing, in this case about 300 every month. So this one obviously it will hit the cash flow, and then you have to add in the balance sheets. And okay, for the investment asset, okay, just take as it is. So in this case, as the name suggests, then total asset, so means that you total up everything, total up a liquid asset, lifestyle asset, and investment asset. So then you have the total asset. Same goes to the liability side. Okay, we just record the item that we have identified earlier. In this case is credit card outstanding. Okay, same goes to the long-term liabilities. Okay, and then the next step, okay, we have to make sure that the balance sheet is balanced. So in this case, okay, we are introducing another item, which is net worth. So how do we get the net worth? Okay, you can get the net worth, okay, by taking total asset minus with the current liability minus long-term liability, then we will have the net worth. So then your balance sheet will be balanced. I mean that you have to add up the current liabilities, long-term liabilities, and net worth, then your balance sheet will be balanced. So important to understand here, when we talk about the balance sheet, one of the thing that we normally prefer, or actually that will be the targets of everyone, okay, is to look into the net worth, whether you are in positive or negative positions. And okay, so once you have done with that, let's move on with the cash flow. Again, cash flow, it is divide, I means that, okay, there are two important items here, which is cash inflow and then cash outflow. Okay, anything that you receive, you record it as flow, in this as a inflow. In this case, salary, children living allowance, dividend are the cash inflow item. So you add up everything here, then you will have, in this case, 140,500. Okay, so take every item that you have identified earlier in the step 1, okay, that we discussed earlier. So bring it to the cash flow, all item, this is all the expenses. Okay, anything that you pay will goes to the outflow. Okay, so you total up the expenses, then you will have the total outflow. Okay, and then this one, how does we got it? Okay, cash inflow or total inflow minus total outflow, then you will get the contribution to saving. Okay, this one, because you experience positive, so we have the, I means that the amount here is positive, so then it is called contribution to saving. Say it is negative, okay, this is what we call deficits. And okay, so I think that is what cash flow that you are supposed to do. Okay, one more time, if you're talking about the step, let's recap. Okay, as mentioned earlier, once you get the case, read the case carefully. Okay, make sure that we don't overlook, because sometimes they will put something like this one. Okay, she's paying for something, so then you have to reflect that, and normally it will goes to the cash flow. Okay, next I would suggest identify each item goes to is either balance sheets or cash flow. Once you have done that, okay, then we can start preparing our balance sheet and cash flow. But okay, I would like to emphasize again, there are certain items, okay, that will hit both, which is the cash flow and balance sheets. And after that, do your cash flow, take every item into its respective classification. Means that liquid, lifestyle, investment asset. Add these three, you will have total asset. Same goes for the current liability and long-term liability. Next, you have to calculate the net worth. Okay, how does we get it? Okay, total asset, okay, minus with the current liability minus long-term liability, then you will get the net worth. Okay, you add up everything, then your balance sheet will be balanced. So same goes to cash flow. You record all the cash inflow. Okay, next you record all the cash total outflow, then you minus cash inflow with the total outflow, then you will have the contribution saving in case it is positive, or alternative, if it is negative, it is known as the deficit then. So thank you, that's all for the tutorial on the IDA case. Thank you.